Yes, good morning, Lagos, good morning, everybody. Hope you had a great weekend. This is Follow the Money brought to you by Nairametrics. My name is UGODRE, and we do this every Monday, 8 to 8:30. It's been running slow today, no guest today, so you're just going to listen to me as I roll through all the key economic issues that took place last week. Of course, I'm not alone in the studio, there's a lot of here, so Krishna, I should like it when she in as I roll through these numbers. Oh my God, it's been a very, very busy week. Last week was busy indeed across Nigeria. I know for the weekend, what else everybody has been talking about has been COP 2020, COP 28, COP 28, in case you don't know what I mean, COP 28. It's a climate change event taking place currently. I think is it in Dubai or something, yeah. It's one of the Middle East. And the gist has been we have about 1,400 also Nigerian delegates who, of course, they traveled by air. They didn't travel on an electric jet or electric plane. It's just irregular, this is fuel power, plane all the way to go and discuss climate change. Of all the problems we have in Nigeria and all the things we have to deal with in Nigeria, oil travel. And that sort of brings me to the first topic I want to discuss today, which is the 2024 budget proposal. I'm sure you've all seen it. 2024 budget proposal. According to the government, as of September 2023, they got 8.6 trillion in retained revenue, which is about 4.5% higher than their target 8.28%. And that essentially is one of the best revenue performance of a Nigerian budget in years that I've been tracking. So typically, they don't seem to meet their revenue targets quarter on quarter. But this is the first 9 months, and they've done 8.65 trillion, 4% opposed to 8.28 trillion that they targeted. And a lot of these actually did come from corporate income taxes and VAT. So in terms of corporate income taxes, they did 1.5 trillion, and of course the VAT portion of the corporate revenue was 318.9 billion. So they did collect a lot more than they targeted for taxes, that's for corporate income tax and VAT. And as you know very well, this administration is going to be very big on taxes next year because that's where they plan to get almost of their revenue from. So they're already showing that they can collect these taxes. And just to put into perspective, corporate income taxes were up 221.4% in 2023. And of course, the customs also, they didn't meet their target like, pro rata. These targets are pro rata, by the way. When I say pro rata, 9 months target. They did 70%, 73% of their target, but that was still too high. But where the problem is in expenditure. That's always been the problem with Nigerian government. As much as we don't seem to meet our revenue target, but we did this first 9 months, we typically don't meet the expenditure target. What am I just saying? We blow past the expenditure target. Yeah, so aggregate expenditure for 2023, like a lot of you would remember, it's 24.8 trillion, and within the first 9 months, we're meant to have spent 18.6 trillion this year. But actual spending from the government was 12.7 trillion. So we're meant to have done 18.6 trillion, and we've only done 12 trillion. So we haven't really met our budget targets, our budget spending targets, right? And of this amount, 5.7 trillion was for debt service. Think about it. As you drive and instructing this in, we're meant to spend 12.7 trillion. Oh, sorry, we spent 12.7 trillion on budget expenditure in 2023, and close to half of that amount in debt service. 5.79 trillion for debt service. Of course, 3.78 trillion for personal costs, and plus a healthy 1 trillion plus for capital expenditure. It just gives you an idea of how well you're doing physically in Nigeria as a government. Like, how do you just put into perspective? You're going to spend 18.6 trillion, that's 9 months of this year. Oh, okay, you don't do that much, and you end up spending 12.7 trillion. But almost half of that money is spent on debt servicing. That's the money we pay to service your loans. And the thing about that is most of that, the debt servicing actually went to paying down ways and means. That's the loans that the government got from the CBN. And so a lot of the money that the government is making, a lot of the taxpayers' money, is actually going towards servicing debt. And of course, actual deficit or physical deficit, like we like to call it, which essentially is when you spend more than you earn, was 4 trillion. So that means we spent more than we earned. Remember what I said? First 9 months of this year we've done 8.6 trillion, but we ended up spending 12.7. So which means we have to borrow the 4 trillion. And most of the money that we spent anyway was on servicing debt. So we're piling on more debt to service more debt. That's 2023. What does the government plan to do in 2024? So 2024, they come up again with another grandiose budget, 26 trillion. I was listening on the radio recently, and someone was saying that maybe the budget wasn't grand enough, wasn't expansive enough, we're spending enough. We should be spending like 10% of GDP on our budget, or maybe 15-20% of GDP on the federal budget, so that you can impact lives more. Yes, that makes a lot of sense. But where's the money coming from? 26 trillion in 2024 is what we plan to do. And out of that, projected revenue is 18 trillion. 66% more than the plan that we had in 2023. So remember what I said earlier, 2023, 9 months, we're already doing 8 trillion. So let's even say 12 trillion if you analyze it. But the current government plans to go to 18.3 trillion in revenues in 2024. And we're very, very bullish about making that much money in 1 year. They're going to get a lot of that money from taxes, of course, and they expect oil prices to remain at about $70+. And of course, they expect that we should be hitting around 1.8 or so trillion, 1.8 million barrels per day or so in crude oil. And of that revenue, of course, expect 40% of it to come from crude oil-related sources, and the rest from taxes and other government business. Now, again, we want to earn 18 trillion, but we want to spend 26 trillion. And of course, that again is what I call budget deficit. Because then, if you're planning to spend 26 trillion and you can only earn 18 trillion, then you are planning to add 8 trillion more debt in 2024. That's what we plan to do. Now, what's interesting about it is most of the money that we are going to spend on next year is also going to be on paying debt. So budget deficit 9 trillion in 2024, still lower than the 11 trillion that they planned in 2023, but still pretty much high. And a lot of that money is likely going to go on debt service again. In fact, they did plan to spend 8 trillion out of the 27 trillion, federal expenditure, FDR expenditure in 2024 on debt servicing. I like the idea that there's nothing really wrong, or fiscal deficits is normal. Like it does happen in most countries where you don't always have to balance your budget. It makes a lot of sense. You can often spend more than you earn. That's how government works in most cases. That's fine. But when you're spending more than you earn cyclically, almost every year, that's what you've been doing that for the last 10 years, and then most of what you're actually borrowing, you're using it to service external existing debt, then there's just something wrong with the entire project. Something's really wrong with it. I think we need to have a national conference on Nigeria's fiscal policy. We need to really see down our stuff. So is this really sustainable? And then when you juxtapose it with the 1,400 people going on the trip, even though they said some of them people were pretty well with you, but I mean, where exactly is the priority of the government? And these things all have ripple effects on the larger economy, on the macro. It does have. It has an effect on inflation, it has an effect on forex, has an effect on everything. And so this is why this is a huge concern. And of course, drilling down on the budget as well, we did pass what we call, projected level of fiscal deficit to GDP. According to the FRA, that's the Fiscal Responsibility Act, that threshold should be about 3%. That's what is in the law. But based on the current budget, we're doing about 3.88%. But there's a bit of a caveat there. The law does allow the government to go above 3% if it is justified by threats of national security. So, you could say that there's a reason why the government wants to go above 3% because of national security threats. Running up the budget, of course, just a bit of an allocation here. Education 7.9%, health 5%, defense and security 12%, infrastructure 5%, social development and poverty 2%. That's a huge part of where this budget is going. So it's good to know that education is going to be a chunk of the budget at 7.9%, much lower than defense and security, but it's still good. We like to see education go up because we think that's one thing that Nigerians need to get right is education. So that is 2024 budget, and I tell you, it's an ambitious plan. We know that this is basically an expansionary government. It'll be interesting to see how budget improves over the next 2-3 years. I don't know how long we're going to keep, running fiscal deficits. By the way things look or sound over the next 3-4 years, based on your medium-term expenditure framework, we're going to be hitting 100 trillion or thereabout in total debt, external debt in Nigeria, and that is a source of concern. I don't know always what to talk about. How about breaking it down for you all? And now, that was the only thing that happened during the week. We will talk about the stock market, and then of course we will also zero in on the forex market after this brief. So let's just cool down a little bit and talk to this. I do work out here. All right, welcome back to Follow the Money. We do this every Monday into 8:30, brought to you by Nairametrics. My name is UGODRE, and I am the show. Of course, we do usually have guests on the show, but no guests today. I'm just going to run it through because there are a lot of numbers I just want to speak to, and I don't want interruptions. I just want to go through the head straight up. Of course, if you miss any part of the show, you just want to listen to it again. It's going to be streaming live on Spotify. Streaming live on YouTube, and you can also get a replay on Spotify, Apple Podcast, or anywhere that you download or listen to the podcast. It's definitely going to be there. And so, we move on to NAFEM, which is the official foreign exchange market for Nigeria. And people who know me know I've got a problem with NAFEM. And the problem with NAFEM is that it's just a forex market that I don't understand. It just goes up and down. It's not straight, but it's just like swings. Its predictability is just disturbing. Like I don't understand it. Sometimes it operates like it's a free market, and then all of a sudden it's as if like there's someone who's controlling things that we haven't seen. At some point, the exchange rate strengthening and then crash and then going up. But at the end of the week, the naira fell to a new low on Friday at 9.7 naira to the dollar at the official market. This is not the black market, the official market. Even though it was around 1,165 or thereabouts at the part of the market. And so kind of sounds like there's a bit of parity here, like the disparities closing between the official and the parallel market. But it's difficult to trust this national market because today now it's probably going to drop again to 800 or 8 something. I mean, you wonder, what are people buying these things? Like, why all these options that we keep seeing in the official market. But uh, it did close at 9.7. Intraday high was 1,160 naira to the dollar, and intraday low was 701 to the dollar, and that's the part I didn't get. So when you say intraday low 701 to the dollar, it means that somebody must have bought at 701 to the dollar, and somebody else must have bought at you know 9.7 to the dollar. So who are these people? Who is the person that is getting FX this low at 701, and who is that person that is paying this high at 1,160? And then who's the other person that's paying 9%? Like, are they all in the same market? Like, where you know that somewhere else is going to get it very low and somewhere else is going to get it very high? I can't seem to find something. I'm trying to understand. Somebody has to explain this to me. Like, how is this happening? How is it that you have three different rates in a day and the disparity is just wide? Like, why? The spread between the intraday high and intraday low was almost 500. Like 459, 1,160 to 71. Same day, not that it's a different day or the same day. And you could see all these sort of swings every day on through uh, the last few weeks. But since this market was launched, and this is a huge concern because it kind of gives you a feeling that this is not really where we think this market should be, even though it's an official market and it's a lot better than it was before. But it's still a market that has no swings. And if you speak to a lot of companies who need dollars or who tend to want to buy dollars officially, most of them that we've spoken to tell us that they prefer to buy their FX on the streets, in the spiral market, to buy dollars in the official market. There are people who trade there. So is this still a market that we should rely on? I mean, it's the nothing market. We sort of perhaps this is part of the process. And when we look back and say, I remember when nothing used to be so full of options and it was going up and down like a yo-yo and you don't really know. So maybe that's what we're looking at here. But the sooner we get this fixed, the better. Of course, we haven't seen the CBN speak to anybody over the last few months. No NPC meeting has been held for months now. We have also typically look for NPC meetings and see how what the central bank is thinking in terms of the economy. It's not looking like we'll hear from them this year. They are not ready for us yet. So interest rate has just remained where it was, despite what is happening with inflation. Interest rate is still about, I think, 18.5%. Thereabouts. Inflation is, sorry, almost even 28%. So you have a huge 10% disparity between inflation and NPR. And of course, this current central bank thinks that, or says, or keeps saying that monetary policy is just going to focus on its core mandate of reducing interest rates or inflation. But we haven't heard from the central bank in terms of what it plans to do to help reduce inflation. Nothing yet, and no movement, nothing has been done. All we just heard is just snippets of information here and there about bank capitalization as if that's most of the things you have to do right now when you're seeing inflation galloping. And so we do need to hear from the central bank in terms of its monetary policy plans. What it's trying to do. I mean, that's your core mandate. So what do you want to do with monetary policy? The government, which is the fiscal side, have already laid out their own plans. No matter how much you like or don't like that plan, that's their plan. We also want to hear from the central bank. What is the central bank vision for 2024, 5, 6? What does it want to do with monetary policy? We're going to have interest rate remain this way at 18%, 0.5 to 15.5%, or is it going to go up, or is it going to go down? What's the central bank actually targeting? What sort of inflation target is it giving itself? The federal government has given itself its own inflation target to look at the NCEF. But for the central bank, what is your inflation target? That is what we want to know. Yeah, so we segue straight into the Nigerian stock market. despite everything that is going on in the economy, as much as people are going through all sorts of pains and inflation is hitting all sorts of highs, exchange rate is 13,200 naira to the dollar, the Nigerian stock market just hasn't liked what it's going. Stocks have been doing extremely well this year and it's likely going to beat inflation by a mile. In case you don't know, if you're not in that stock market, you're missing out a lot. There's a lot of fun going on in there, and investors have made some good money in 2023 from the Nigerian stock market. That's just a reality. I've seen a lot of folks come up to me on Twitter and say, "Look, trying to economics fine, blah, blah, blah." It's just keep going on and on and on. And I'm like, that's the reality. The NGX is just has a life of its own. I mean, November, the NGX gained 3%, the all share index in November. So investors seem to be betting on hope. Not me, investors are betting on hope. Stocks are on the fly. A lot of people say, well, maybe that's because, you have a lot of people, you have a few companies that are being the ones driving the stock market. But doesn't really matter. The all share index crossed 70,000 points. It's doing 70,000 points already. And it's been one of the best performing stocks, not just in Africa, but globally. And so we did speak to a number of people in the market just to get an idea of what is going on. And they said that look, it's been a lot of stuff happening. A lot of companies are also made a lot of money from um, the exchange rate issues, exchange rate challenges. The funny thing with losses is that when someone is losing, someone's gaining, and so as the wider economy loses from the exchange rate depreciation, people who bet, against the exchange rate or people who have dollars tend to make a lot more money. And so banks are making a lot of money this year, and that is also one of the major drivers of on the stock market. What is interesting is that a lot of these banks still also trade at very low price to earnings multiple, three times, two times, 2x, 3x, which is pretty small conventionally because price to earnings multiple will usually be around maybe 10x, 11x, 12x. But you're seeing a lot of banks trade that high at that low at 3x. And so that's the stock market doing pretty well. Are you invested in the stock market? Which is your favorite stock? I'm interesting to know. But I just want to do a little bit of a rundown on some of the stocks that we've seen this year do pretty well. There's been a number of them that have gained extremely well in 2023. Um, let's give you a little bit of a rundown. I'm going to avoid some stocks that I just don't like to mention, but I'm just going to call some that I think that are worth noting. Access Corporation, which used to be Access, is up 100 year to date, up 112% year to date. So if you bought Access Bank earlier in the year, you'll be up 112% already because at the start of the year it was trading at less than 8 naira or 9 naira. Currently, it's at 18 now, so 112% this year alone. A lot of stocks like that. What about Bua Foods? Bua Foods is up 206% this year alone. I'm sure you all know Bua Foods up 600% this year alone. And of course, you keep going on and on and on, and you go to Geregu Power, the only power company listed on the exchange. It's up 167% this year alone. This year, 167% gain. And if you move to Dangote Cement is up 22% this year. They beat inflation, but still up there. That's one of the top gainers considering its size. And if you go down to MTN, which you all know, 10.7% gain this year alone. Stock has got a bit of challenge, with FX and all that, but nevertheless, it still recorded 10.7% gain. So there's been a lot of companies on the exchange with huge gains. Seplat, for example, has stood there among the suits. That's the stocks worth over 1 trillion, with over 100% gain as well. And the wider NGX, like I mentioned earlier, is up 39.3% year to date this year, way higher than inflation. I mean, some people are going to tell me, look, if you adjust it for the effects, then that's going to be much lower. I know, I agree, but I mean, this is Nigeria, we spend naira here. So I'm just going to look at the all share index in terms of year to date returns in naira terms, and 39.35% is amazing by any standards globally. And that is what that's this stock market is currently doing. And that was as of Friday, December 1st. All right, so still always also been a number of news from a few companies that I want to talk about. EcoBank did release its 9 months results. During the week, profits up and 55% year on year over the last 9 months. Amazing results on EcoBank International. Like I said, bank seems to be doing well this year. FCMB as well did also well. They also released their result after much wait. The group posted a pre-tax profit of 55 billion in 9 months ending September 2023, and which also is 108% growth year on year from the preceding period. This is no better time to be a bank at the moment. And this kind of gives me a bit of concern because it kind of sounds like banks are doing so well that you think at some point they're just going to plateau, or there's just going to be like a downtime, or down, like they're just going to maybe start to fall. I hope that doesn't happen, but looks like there's probably a bit of headwinds for banks coming in. Most bankers know that there are headwinds coming in. We do hear that regulatory forbearance for a lot of banks are it's going to be reducing. Regulatory forbearance essentially is the central bank telling banks that they are allowed to pass on some losses that they ordinarily should have incurred, just because of the wider issues on the economy, especially COVID. But kind of sounds like that era is gone, and looks like the current CBN is looking at tightening the screw, and so likely going to be some gyrations in the banking sector in the coming weeks, and so that gives me a bit of concern. But in the meanwhile, let's just enjoy the fact that banks are doing astonishingly well. This also gives them a lot of buffer because all these profits that they're making, they probably might not declare all of it as dividend because they have to keep some buffer because of what's coming ahead. Also in the news is Guinness. Guinness Nigeria finally has a new CEO that is Nigerian. That is the first time this is happening since 2015, if you all recall. Guinness had a Nigerian CEO at that time, and they went through a lot of turmoil. And then the switch to having foreign CEOs, foreign people as CEOs of the Nigerian beer giant or brewery giants. But they recently appointed a new CEO for Nigeria by the name of Mr. Adebayo Ali. That is the new managing director. And congrats to him, by the way, for being um, the first Nigerian CEO since 2015. I mean, I always like to see Nigerians leading the helm in in some of this foreign-owned companies. So congratulations to him, and then we can only but wish him the best of luck. And finally, for me, is the good folks at UBA. They did get an award over the weekend at the Bank of the Year award. I think they got an award. They said they won 9 awards at the Bank of the Year awards in the UK. So congratulations to the bank. Been one of the best performing banks this year, anyway. And